Before we start with new topics, we are gonna do one more thing. I didn't explain all the moves in the homework video. I mean, I did explain all except for one, and that's this one. This buy right here. So who has big balls? Me, Hamza, open your mic. Let's go.
Yes, bro.
Can you annotate on my screen?
Just a second. I think
yeah.
yes, no.
Oh,
Yeah.
perfect. So yeah,
Great.
the last, I mean, how I solved the
I'm
homework and
recording
how
this video
I gave
because the
the
recording of this
solution
call
was that there was
not good.
1 hour price behavior, of course. I mean,
Yes.
but if you look at this, it's not really visible, right? So it's
والآن
just
نبدأ
price
التفكير
behavior. It's enough for an
رسميا.
entry,
حسنا، من
but it's
فضلكم
not what's
اكتموا
really funding this
صوتكم.
move.
ادخلوا جميعا إلى
Because if
تطبيق
you see
زوم. تأكدوا من
watch
كشف.
daily, let's say, the move was huge. So I hope insanely
Everything
huge,
is okay.
right? It's bigger than
This will be
any bullish move that we had so far. So it couldn't have been funded
والآن
or
نبدأ
sponsored by this small
التفكير
price behavior.
رسميا.
So your mission is to
حسنا.
find out what caused this move.
I think the first one is this
so I'm recording.
area here, this low, the inducement, I believe so.
Yeah, so
And,
that's just a level.
Yeah, that was just a level, and also the 1 hour. If you go in 1 hour time frame.
No, the solution is not on 1 hour.
Okay, so the solution is not in 1 hour. So I think after this level that got taken out, we did have some sellers induced on the support and resistance, if I'm not mistaken.
But that would mean that every time we break structure, there is resistance.
I think we do have this fake break of structure, and then we have this low that was taken out.
Okay.
In the
so this was this was the first thing that you should see.
Yeah. And this one too.
And this one. So you have a fake break of structure, fake break of structure.
Yeah.
This could have been active liquidity. Another thing you guys can add is, again, a trend line breakout, right? So really nice build up. Price broke up. And then because this move didn't have any price behavior, it was just, you know, pro direction inducement, basically. This low is not good. It's not gonna be long term, right? And then what's gonna happen? This becomes a trap. A trap gave you a reaction, and it gave you even another fake break of structure. So I'm surprised that not a single person saw this, and not a single person solved it like this. But this is
saw it. No.
Yeah.
I think we got too focused on the lower time frames, like 1 hour and 4 hour, and we forgot the bigger scale. Even though it took like maybe 2 or 3 months, to get here, but this still plays out because the move it happened in 4 months. The market was bullish.
Exactly. Okay, so you can mute yourself and let's continue.
Yes.
I might have a question real quick. Was this also possible, this build-up? Like you have this momentum inducement into like this level right there.
Oh yeah, you can wait. But yeah, so it could have it could have been like this, right? I mean, okay, let me try it a better way. Let's try with this one. Yeah, I mean, no matter how I try it, it's not an momentum inducement. And even if it was, it would still only be a pro direction inducement. So meaning that if we don't have active liquidity, like if we neglect this fact, all this information, then we will never know from this point that it's gonna be a swing move or that big of scale, right? That it's gonna be, for example, bigger than this one. So no.
Okay, thank you.
Okay, so all questions for the end of the call, please. And let's continue. Today's call will be longer than usual. I mean, I hope it will not be as long as the last one, but it will be more information dense. So after this call, we're gonna have a 1 week break for you to process all the information. And because you have so many concepts now, you will be able to put most things together and make a proper markup of this chart, for example. So next call will be in exactly 1 week. Today, we are gonna talk about high time frame levels. We're gonna break down liquidity. So we know from the last call that liquidity can be separated into 3 types, right? Liquidity from the left, price behavior, everything that is happening before the reversal, and price delivery. So far, we solved price behavior. So this is done. Boom. But still practice it, of course. And today we'll focus on levels from the left, and this one will be for the next call. It's gonna be a short chapter. And part of the liquidity topic is also traps. So that's the third big thing that we are gonna talk about today, that we're gonna try to mark up. All right, so on the Discord, some of you try to predict moves, some of you try to look for trades, but I explained to you that what you're marking right now is not enough to take a trade or to do a complete analysis. You're basically trading a pattern, right? It's the same as if you trade, I don't know, break a structure or break and retest. It's the same. It's just a pattern. If you code it, if you implement it, make an EA from it, it's not gonna really work, right? It's gonna have a high failure rate. So we have to add new confluences to it, and that's a high time frame level. Every single move here that you see on high time frame is funded by a level. I don't really remember any move from here that is not funded by a high time frame level. So yeah, most of the moves here. This year was a bit different. This year had a lot of shitty moves. So there are random moves, of course. There are still random moves that are coming out of nowhere. But even if that's the case, then we can use it as information for later to trade. But now let's get into the levels. So I call it high time frame objective. As I explained in the last call, we are trying to collect 100x, right? And every time we finish a cycle, we want to start a new one, meaning we want to induce, we want to be in some level that has a lot of liquidity, right? And then we want to start a move. But most of the moves will have a high time frame level. So that's what I call a high time frame objective. And the levels are this: liquidity, high time frame liquidity, perhaps rebalance. Oh, efficiency. Okay, efficiency. Is it correct? I hope so. Let me check my notes. PDC extreme subjective liquidity. Okay, that's all. So we are only trading these three big levels, and these three big levels can be categorized into, many different levels. We also don't really trade POIs. So if you watch my chart for long enough, you know that I don't really trade POIs like SMC guys do. For example, I don't trade POIs from the left, right? So if we are bullish now, I'll never use supply and demand from the left. So we'll go through that too. But first, let's start with liquidity. So there's a lot of ways to categorize liquidity. These are the liquidity levels that we trade. I'll break down each of them. So we have ALQ, all liquidity, which is basically a build-up. Every time we see a chunk of liquidity, there is always the last point of that liquidity. So let's see. For example, here on 1 hour, let's start with 4 hours. This was move funded in 17th of June or July. Yeah. So for example, here you see one big chunk of liquidity. That's all the sell side that is here. And then you usually have a void below, right? So that's one. Another one would be this one. So again, you see some build up, up. The last point of this is right here, right? And you can, of course, just go to one time frame lower. So these are all time frames that I use, M5, M15, H1, H4, daily, weekly. One time frame lower would be from H4 to H1. And you can go to H1 to refine the liquidity, but you don't want to over refine that liquidity point, right? So this would be ALQ that funded this move. Let's continue. Let's see what happened after this one. For example, here, same thing. This was created during news. I think this was Trump talking or FOMC, but I'm not sure. So again, if it's news, then everything that happened, oh yeah, it was Trump's speech. So everything that happened here during the news is equivalent to high time frame. So if I mark this low, this low, this low, this low, it's all H1 or H4 lows, right? So same thing. We have some sort of build up here, and this would be all liquidity available in this one, right? And then you just have external structure. So another beer, for example, something more recent. Let's go to H4. Something more recent. Let's see. The most recent buy we had was from this one, not exactly from that, but it could help us refine the trade, the move. So it was from here. Another one we had in September was this. So let me break down the move for you. We broke structure to the upside. We reacted to some SMT, some trap. We broke structure down. You see that we already had many manipulations, right? This high, this low, this high. So after this one, I would say, yeah, this low should probably hold, right? Like we could possibly take mitigations from this low and look for a trade higher. but of course the range is really big. There's a big gap here. So there's two options. I'll play the move. Still, even on a day like this, I'll wait for a significant level to trade. First thing I see is, as I said, a mitigation. So, you know, if I say a mitigation of the low, it means that you can take a buy anywhere you want inside this low, right? Inside this range. But of course, you can define it so you have some POI here, some demand, or you have some ALQ. And again, you can see that it's a big chunk of liquidity. Okay, so here you see there is nothing lower than this, just void, right? Price will look like this. I hope. Yeah, one more thing. One more. This is a bit different. It's not really connected, but later it reconnected with the price action. And again, below this low, there is no more liquidity, right? There's a gap, a void. So again, you have ALQ right here. Later on, you can also add confluences like break and retest, but it didn't even break and retest here. So yeah, I hope this one is clear, and we can continue to the next one. Next level that we have is high resistance liquidity. So basically strong highs and strong lows. This is my favorite level. I think it's the most efficient one. It can be an external break of structure, an external stop hunt, but it can also be internal stop hunt, so internal structure here. And then, but you need a wick, you need a stop hunt here. So that's why I showed you stop hunts in the last call. It should be a rapid move to the upside. So let's look for strong highs. Do I remember any? Okay, so the most obvious one that we had this year was here. It was where the big move started, the big sell. So yeah, again, if you want to learn levels, you can just mark the reversals you want to analyze and look at the left. So here you see we swept this high right here. This was the main move, the main level for the sell-off. And what happened? Oh, this high took this high out by 1 pipette, I think. Remember this day? Yeah, so here you see, bam, you have a stop hunt. It's an external stop hunt also, right? Bam, bam, bam. So it's a strong point. It's high resistance liquidity. What happened? Price took it out and went down. Another famous example that you could have learned was this one. In this case, it's not really a clear stop hunt, but I would count it as high resistance liquidity too. If you're not sure, then just see the structure, right? Another one that I would see here is this one. I don't think it gave a reaction, but it's still, oh, it did give a reaction. Oh, perfect. So it gave you a really nice sell with 450 pips, almost 500 pips. So very, very nice. Another one we had was here. So I would love price to take out this one, right? Again, stop hunt, strong high, perfect. We can use something here also. So you can refine, backtest. Same thing. Look for levels, look for structure. And what do we see? External break of structure, external stop hunt. That's one level. That's two levels, right? And even the trade that was here was funded by a strong high. So the logic behind this liquidity level is people really like to trade strong highs. They would see it as a POI, of course. Just because you mark the liquidity does not mean that this cannot give a reaction or even a swing move. But generally speaking, this should be our liquidity, okay? So a third level was right here. Oh, no. Yeah, it could be this one even later on, but the move was funded here. So what happened? Bam, we took up a strong high and continued lower, right? Very, very easy. Even here, you see, it's not a really clear stop hunt, but here you can see price is taking some, lower time frame strong high or some lower time frame structure, right? We are sweeping that out. And even in this case, we could count this as high resistance liquidity. Okay. So I hope everyone can see it. If we analyze these ones, then there's probably nothing. This could be high resistance, but it becomes equal lows, so it's not really nice. And here it's just structural points, so nothing. Okay, let's play it out a bit. You can stay on daily. And now look, we're looking for a level that could fund a move, right? Or let's say I wake up here and I'm looking for a level that could start a reaction to the downside. So I go to daily, I'll start marking levels that I see. And the first level that you should see is the strong high right here, strong high right here, and the one right here. So all three that we found before, right? Because these are the liquidity points and because these are strong highs, it would also mean that it becomes a trap, right? People will really love to sell from here, sell from those POIs. So we generally don't want to sell from there. And okay, I'll explain this case later. So we take out this one, we would maybe try to short, maybe hit a stop loss or a break even, that's fine. Then we give a reaction. Normally you could say, yeah, we are not sweeping anything else. We are still reacting to this one, so it could swing sell. But in this specific case, above this strong high, you have another one, or I mean, you have a trap, which means that now you're reacting to a trap, not a strong high, right? So it's not a good level for a swing move. What happens later? You got an F-boss. To the downside. A stop hunt that also lined up with the other strong high, right? So you had from here, you can say that you're gonna swing. Really easy. Another easy trade in my life. We can go to H4 now. I don't think there was anything nice here, so we can skip this. Nothing really nice here either, neither. Yeah, so I hope this is enough as examples. Then we have, let's start with something better. Extreme would be nice. Okay, let's do this one first then. We have momentum liquidity. So this is really subjective. It's basically where the momentum came from before every break or every big move. But again, that would mean that every single leg would have one liquidity point, right? And that's not ideal. For example, here you would say, oh, this move started here, for example, or with this breakout structure, the last push was here, for example. Not really ideal because it would be everywhere. Here, it would be this one, it would be this one, it would be this one, then this one, then this one. There's too many of them. So we don't use this as a main level, okay? It's not something that we are actively looking for. The first two are, I mean, the first two so far are what we are actively looking for, but not this one. This is just a supportive level. What does that mean? Basically, if you have a high time frame level, let's say daily structure broken here, right? We don't want to buy just because of that structural point taken out. But if, for example, with this daily structure, we have momentum liquidity that lines up with it, then of course you can use it as additional confluence, but you never want to use this level alone. And again, every single range would have it, so we filter it with news only. So where the news start. Few examples again. For example, here, this is a perfect example. We are breaking daily, weekly structure, right? We are also not having any price behavior with this low. Remember, if you did the homework, you know this F-boss was not valid. We just induced more sellers in, right? But this is after taking out the level. So we are still interacting with the level, but we cannot say we are trading of that because that would mean that we would try to buy, you know, the whole time as price falls. That's not a good idea. So ideally, if you want to buy from this level, we should have another supportive one, right? And if you look at the left, this is the last pullback. Oh, this New York time, my bad. Okay. This was news, probably. I don't know. Just look at the momentum, that's enough. And this would be the last sell to buy before, I mean, during the news, probably. So this is your momentum liquidity, right? And you would ideally want to trade from this level right here. Really nice. Another one we have, in this case, it is just a solo level, but It doesn't matter, really. So you have an NFP here, NFP release here. And again, you can use the release as your main liquidity point, because when you're evaluating liquidity points, you're looking at the size of the move and the volume of the move. So there's a lot of volume here, right? Perfect. I'll show you one more. Let's see, was there anything nice? There are many from this year too. If you wanna check, you can check it out. But I'm just using the first thing I remember. So here, for example, 1 hour, I mean on 4 hour, we don't really know what we are trading away from, right? Like we could say that we are selling from this level mainly, that we are breaking down. This would be a trend line. So we are not reacting to anything specific right here, meaning this low reacted to nothing, right? It will become a weak low. Contextually, it will be taken out. And now this is your key level. It got shot through. So again, it would be nice to have something support that. But on H4, you don't really see much. So we can go to H1 or even M15 to see the news release. And for example, in this case, specifically, what time is this? 2? Oh, 1:35. Okay. So, okay, let's go to M5 even. Holy shit, it doesn't help us at all. Okay. So here, for example, you see the last pullback before the big explosion down was generated from this point right here, right? But again, you don't want to use this as a solo level. Like you don't want to scroll through charts and look for a level like this. The moment you have Asia, price reacts to something, then you mark the line here. For example, you mark a line here and then you look at the left, but you never want to scroll to price action and look for these points because there's not many of them. Why don't you consider the change in direction as FPOS? No idea what that means, but I'll answer that later. So the next one we have is extreme and PDC. So it's essentially the same thing, but marked differently. Extreme is the last structural point that you can mark, the last internal or even external structural point in a range. So let's go to the previous examples. Here, for example, this would be one structural leg, one low, price explodes up. So one high probably. That would mean that this would be extreme and ALQ. It can be two at once, okay? This level right here. Another one we can have was the one I marked before as ALQ. Again, it's the last internal structural point that you can have inside that leg. What is ALQ? Yeah, that's crazy. I just explained it 10 minutes ago. If someone is interested and want to understand this year's buy from here, again, it would be the last internal liquidity, the last internal structural point of that leg. Later, I'll explain to you how we can anticipate a buy from here instead of, for example, just a fake break of structure and inducement. Okay. And the second extreme level that we had was PDC. So PDC is the lowest wick or lowest structure possible. There cannot be another price action below this one, okay? It has to be the lowest one. So it will look like this. What the hell? If you have this, for example, imagine these pullbacks as wicks. It would be really hard to find a PDC. And in these cases, I will automatically assume that this low will be taken out. Of course, some miracles happen and price will take the most extreme point right here. So this is price delivery compensation. And in the next call, I'll tell you how to anticipate it. But now just focus on being able to mark it, okay? So price will usually protect the low, take this point out, react, and then go. 2 examples. Oh, my bad. Oh, this was nice. So first, there must be a reason for you to think the low will hold. So let's say you know that this low will hold. And then you have the lowest point taken out. Nothing else. It cannot be lower than this, right? There's no wick below this. This is the lowest point that this leg has. So price will usually reject from it, give a nice reaction, and then you would have a trade, right? But again, don't treat this as a pattern. Don't try to sell every time from here and then buy every time from here and buy every time from here. No, we will build context around this. And after multiple layers of analysis, we will come to conclusion that, for example, this one will be valid. One more example. Let me think. One more example was the February buy this year. So this would be the lowest structural point taken out, and this would be PDC. So this would be complete extreme of that leg, right? Simple. Let me think. Was there any other? Okay, 2-minute break. Okay, let's go. Holy shit, I cannot remember any example right now. Okay, I think here. I hope so. There's nothing here. It's the example this month. Oh yeah, perfect. So one more example is here. We did not have any nice level that we are trading from, right? We did have price behavior, and then price takes out the last extreme point that you have here. So that's really a nice example again. And one more PDC would be right here. So if you look at this on M15, we can see that this is some form of high resistance liquidity. We did not have any price behavior, and the way to compensate for it is again to take out the last extreme point. So you wait for a rejection, then you enter, you have a stop loss above this. It's all Gucci. One more example right here. You go to H1 and you see price takes out the last structural point. Sometimes you can go to one time frame lower, and you can even refine it like this. It doesn't matter what time frame you go to here. You cannot find a lower point that was not taken out, right? Bam. It literally takes out the last point. So I hope this one is clear. We're speedrunning this. PDC extreme. Now, I'll explain the traps later. But we have one more, and that is PDC is another an amazing level. Extreme is an amazing level, and structure is something controversial. Yeah, extreme and PDC are similar. So structure, there is a lot of structure in the market, and it's really hard for you to differentiate them, right? That's why if you have confluences, like one, for example, we have three and let's say we have 5 structural points like this, and it would be really hard to differentiate them. So that's why I don't teach you names and definition of these levels, but I would rather you to be able to logically come to a conclusion why, for example, this one will be better than all these 3 before them, right? For example, it can be a high resistance liquidity point, or it can be an extreme point, or let's say this one is the best because all these don't have anything special, and then it would make this one ALQ, right? But it has to be something that will differentiate it from the rest. So we will look at the relevance of the liquidity, meaning the size of the structure of the move, right? So this will automatically mean that daily and weekly structural points, major structural points, are going to be significant levels. Break, price sells, right? Price breaks down, price buys. Price breaks up, price pulls back. Price. But this does not mean that we want to buy or sell every time we sweep out sweep a high or a low, because that would mean that we would also buy on every single break of structure, which is stupid. So these structural points usually only serve as a complementary level, as a supportive level. But you should have another level lineup with that, right? Because you have a rule, a holy rule, and that is to stop trading whenever price breaks out of a daily or weekly range, out of high time frame range, for example, here. price breaks out of here, the first thing you should do is chill out a bit and wait for another level to align, right? But you don't want to sell this day. And then maybe price takes here, you maybe get one stop loss and a sell, but you don't want to automatically look for sells. All right, same thing here. Price break structure doesn't mean that we are going to look for sells automatically. If there's no level on the left that will support it, then it's probably just going to be a break of structure, right? So here, if you check, all these break of structures will have some level that lines up with them, right? For example, a break of structure here will also, this one will also have something that lines up with that. This break of structure has something that lines up with that too. This break of structure has maybe this one that lines up with it. It could give a trade, probably a break even, but that's fine, right? This break of structure will have something that aligns with that, right? So extreme liquidity from the left again. This was just high resistance liquidity, so that's nothing. But yeah, for example, this break of structure also, you don't want to buy right away, but you want to wait for a level to align with that. So there's no level, there's this low, which on weekly I think is ALQ, but I'm not sure now. It also applies on H4. Every time you break structure, you don't want to automatically trade, right? So every time you break here, you don't want to short. You want some level to align with that from the left. But for example, in this case, there is no clear level, right? You see, if there's too many wicks and you're not sure what price is selling off or trading off exactly, then you just assume that it's reacting to something random. So its size is what matters and what it did. Same thing as in the last call, there is relevant and irrelevant structure. And this is something you have to train till, every single day to be able to differentiate the good from the bad. This price action can be explained with context, but let's just use what we know right now. Price breaks this high. What was his name? Hamza.
Yes, bro.
Bro, are we gonna sell here?
I think no.
No, great. No, because it's just a simple break of structure up.
Yes.
Again, this can be an FBOS, but price starts building up, making this FBOS irrelevant.
Yeah. Yes.
Do we buy from here?
Do we buy from there? I think no. No, because
Why?
we don't have any PB before that.
Oh no, we don't care about PB as a level. Is this low? Is this low better than this high, for example?
I think yes, because sellers may be in those now here after this BOS.
Okay, that's something that will add to your context. But what matters here is that we are breaking up, okay? That it breaks structure up.
Yeah.
For example, sometimes you'll have price action that I'll already drew the same price action, but a different scenario where price does not break the high. Okay, and then it will do this. In this case, do you see the difference between this low and this low?
Yeah.
Like it would be, if you buy here, sure, but usually it will just do this and it will keep breaking down until, it randomly breaks up. So it does not help you. There's no way for you to tell if this low is different from this low. Like there's no confluence, nothing, no additional information that can help you. Okay, what about this low though? Would you trade of this low? Does this seem like something good?
Yes, for me also, because the trap to the upside and then this becomes a trap too.
Yeah, perfect. What about this low though? Okay, this is a tricky one. Without caring what happened, just if you live trade this, do you think this is something that would be relevant?
I don't think so, because this was an internal low. It wasn't like internal high, sorry. I think it wasn't a subjective break of sort of fake BOS. So basically, we just need to wait for more confirmation. And also, you don't have here a PB or anything else, but as a level, no.
Exactly. Bam. So thank you. You can mute yourself. As you can see, there's a clear way to differentiate highs and lows, right? That does not mean that price will never randomly buy from here. It will. But if that happens, you don't want to position yourself in this trade. You want to wait to see what happens. You can use whatever information that is here to build up context for the next trade, right? But the only thing I want you guys to learn from this mentorship really is that we don't just buy and sell from every single high and low, because it doesn't make sense. Same for this high. Okay, we might have broken something small, but if you look at the overall structure, like it doesn't do anything big, right? It's still part of the buildup. It doesn't induce anyone. So I hope structure is clear for you. Of course, there are confluences for structure, which is the same, strong high lows. And one more thing is positioning. break and retest. This is what I like to use for continuations after a reversal is established. So let's say we have some level here. We have a really nice price behavior, or let's say not even price behavior. Let's say some reversal, okay? It doesn't have to be textbook price behavior, but just say that you have enough confirmation or information to know that this high will hold and it's going to sell from here, okay? Whatever it is. Then, for example, a break and retest right here would give you additional confidence of why I could choose this one over, let's say, extreme here, right? So it would be, in this case, it would be ALQ plus break and retest plus pricing or positioning. So one example. First one I can remember. Very nice. We have some reversal here. We don't really have a level, but you don't care about that right now. So you have an FBOS inducement. Let's just say we have we establish a high here. Let's say you're not sure what to do because you don't have a level, right? There's a reason to go down though. Price should go to extreme before exploding. This is still just the first break of structure up. Like price is not gonna swing after one break of structure usually, right? So now you'd be looking for a continuation down. But yeah, let's still say that we are not sure. We're not sure. Okay, price keeps breaking down. And this will be the reversal. So everything from the left will probably become a trap, right? This is a strong low after a reversal. So for me, people will try to buy from there. And here, let's say you can see you have 1, 2, 3 structural points. You're not sure which one to sell from. Then you can look for another confluence that will validate one of those highs. And if not, then price will probably go to extreme, right? So here you have a valid ALQ plus break and retest. Bam. And you can find a good level to trade. So I hope everything regarding structure is clear. Clear as day. I hope it is. Then we have something controversial, and that is relative equal highs and lows. One interesting thing I found out during my 5-6 year journey is that relative equal high and low works on most instruments, but it works the first on EU. So if you watch my YouTube videos, I said I don't trade relative equal highs, relative equal lows, equal lows, equal highs. I don't trade trend lines, but I do in some specific scenarios. But we generally do not want to trade this. Okay, so 2 specific scenarios is price behavior can give you probably a short-term trade, and double sweep, which I'll explain to you next time. Okay, so if you have notes, if you do anything, take notes of this. But yeah, I think this is all regarding liquidity. So now we can move to traps. Bam. So the point of traps is, of course, context building. It does, for example, if price sells down here and reacts to this trap, it does not mean that we are looking for this trade. We simply wait. We simply wait and see what's going to happen. And the more price evolves, the more information we have, right? But we generally don't want to trade that. It's sometimes a tradable level. So, of course, we can sweep a trap sometimes. I mean, most of the times, but it will not give you a trade most of the times. It will just fly through, right? So there are only few traps that can be traded. Build up trap for continuation. Then everything that I'm saying, make notes, even if it seems not important. Continuation. What else? A context trap, there's too many of them, so you don't want to trade that. Momentum trap is the same as momentum liquidity. So it's just a supportive level, right? You don't want to trade that solo. So just support. This is the best thing that I've seen, traps with subjective liquidity. So this is the reason why I don't trade equal high, equal lows. Basically, below every equal high and below every equal low, below and above every equal high and low, you have a supply and demand, or most of the time, right? If there is no supply and demand, then it would mean that it's ALQ and it can be traded. But most of the time there's a trap, and this trap is way stronger than the liquidity above. Still, this does not mean that price cannot react from here. So yeah, I also tested this with volume profiles and footprint, and most of the time there's the most liquidity on these lows and highs. So yeah, so that's something we can trade. Strong highs, strong lows, of course, can be traded. Retail trap is just for context building. Usually it does not give you a trade. And this is just for context. Reactional trap is also just for context. So remember that. And now I'll give you a definition. Now I'll give you the definition of each, and I'll show you some examples. So strong highs, strong lows, we just did that, but I will explain the logic behind it. So during this whole bootcamp, you saw that we did not mention supply and demand. It is because I do use it, everyone uses it, but we use it to the minimum, like we barely use it. So why? Why is that? How normal people trade is they have some price action, price reverses, and they're looking for a PY either for continuation or for a reversal, right? But if you go to the chart next week, try to give yourself 20 tries of guessing the PY for the reversal, whichever confluences you use, which level liquidity you use, and be honest with yourself. Try to get the accurate results of how many times you can guess it correctly. Because I spent three years on the hunt for looking for POIs, and there is nothing consistent and nothing reliable. So we only use supply and demand in the current leg. Only on the current leg. And if, let's say, we have a reversal here, it doesn't have to be a complete reversal, but let's just say we have M15 price action right here, and we just took out daily liquidity level here. Even if it's a shit level, it does not mean that price has to be bullish, but what it means is that we should always anticipate a bullish pullback, right? And a bullish pullback on daily is what? Is a bullish move on M15, right? So M15 would be bearish here, bullish. On daily, it would just be a big move, a small pullback before a big move, right? So liquidity on the current leg must be, the supply and demand on the current leg must be interrupted. So it has to be a healthy reversal, and no resistance levels from the left. The moment price taps into the resistance, we are switching direction. And if we are switching direction, even short term, it would mean that here we are currently in a bullish leg, and all the supplies from the left now are not in the same leg. And that is a context trap, right? So all the supply here will become traps. And we generally don't want to look at them. We just trade liquidity levels, not POIs. I'll show you a great example. You can find an example anywhere. You can choose any random leg you want, and you can explain the whole thing yourself. But let's just say here, this is my favorite example. So yeah, you see how healthy the trend is running here, right? It's just sweeping liquidity, respecting the high, right? Sweeping liquidity, probably respecting the high also. Oh, it didn't, huh? Okay, I'll show you why. But even here, you see how price just, it's just chilling. It's just mitigating. Here, it's also some sort of mitigation, right? Here also, it's chill. It's chill until you sweep something that could potentially interrupt with it. So for example, if we are selling here, that's fine. That's fine. Here's fine too. The moment we break out of here, you should automatically assume that all these, that this one becomes a trap, that the one above it becomes a trap, right? And then the one above it. Like all of these should short-term become a trap. Here, it didn't react from this specifically. It reacted from a weekly FEG. So you can consider that some resistance level also. So we have a really healthy bearish move on weekly. And then the moment price taps into a weekly FEG, which is one of two only levels we have here. So on the FEG and weekly liquidity level, what happens? We have a pullback on H4, right? So a bearish move, we tap into resistance. It could cause a short-term bullish move. And the moment this happens, like we are tapping into here, all these things here become a trap, and we don't want to use the POIs anymore or any form of supply and demand. And if you look at weekly, it's nothing. It's just tweaked up and down. It's just a little pullback, right? But it will be a catastrophical bullish move on H1, H4 daily if we keep trying to take continuations without being aware of this. So that would be the context trap right here. Every time we see a high time frame level, we are switching either long-term, short-term, or in the middle of the reversal. Of course, the reversal can take time. It will not buy right away, but we will invalidate all the supplies here. Strong low breaks with that. Again, if you're in a bearish move, it could respect and go. The moment we reverse from here, all the strong highs, strong lows become traps. Next one we have is a retail trap. So that's just a build-up. The logic behind this one is if you check these highs, we don't really take liquidity, we don't really induce liquidity, right? We just break higher and higher, and then we break lower. We don't induce anyone. Usually we just sweep some liquidity level, but this is not enough to form a healthy move. So this will usually become a trap. And you can also treat this one as a pattern. 90% of the time. Just 10% of the time it will mitigate for some reason. So some examples. Do we have any? Yeah, perfect one. So first one we see, this goes up, right? It's not a perfect build up, but the logic is the same. We break up, and then we sell down. So this would be a retail trap. Next one that we could have was here. So if you break down, right? And again, it should become a retail trap. Same thing here. Really unhealthy move, right? We did have an FBOS, but it didn't short. Oh, but it didn't short. It went higher, maybe it took something, but the reason for the short was not the price behavior. So again, a retail trap right here. It again can be two forms of traps. You can have more confluences for it. For example, it can be high resistance and retail trap at once. In that case, it becomes a tradable level. Okay, I mean, this one is a bit weird. So nothing with that. Same thing here. We had a build up, a breakout towards upside. This becomes a retail trap. Something nice. Let's see. And this was nice. So some of you broke this down on low time frame. Now you should be able to break it down on high time frame. I mean, now you should be able to break it down fully. So same thing, a trap. And ideally, we don't want to trade that, right? So that does not mean that it cannot give a trade, but generally we don't trade that. So I hope this one is clear. Same thing. This would be also the FBOS, right? To the downside, but also a trap. So again, if it lines up and it has more confluences, you can still trade up. Okay, Hamza.
Yes, bro.
Oh, actually nothing.
Okay.
It will be interesting. You guys will break down this move later. That's the homework. Okay. So retail trap is done. Context trap is done too. Build-up trap. This is mainly for continuations. It can be a high time frame build-up trap. Then of course you can look for a reversal, a lower time frame, medium time frame reversal. That's fine too. And that is the last point of the build-up. Okay. So if you have a build-up, this move, the last point, logically has the most volume out of all. So this is your level that you want to trade. If price takes out another structural point, so you should have real clear structural points. If price decides to take this one out, the whole idea is invalidated, okay? So with this level, you have to be really strict. The buy has to happen between these two lines. It has to happen here, here, or here, like this. But it cannot take out this low and you look for a trade, no. So this is what we call an invalidation point. Okay, even when you trade structures, when you trade liquidity points, let's just say you're trading this, right? Okay, maybe I'll do it like this. It looks a bit different. This is your high resistance liquidity, but the moment price shoots through it and continues to another structural point right here, you can say that you are not trading from this low anymore, okay? You are trading from the last thing it's reversing from. And if this last thing is something really weird or shit, then of course, then it invalidates the whole trade idea. But in this specific case, it could be high resistance, then it takes extreme and reacts from the extreme. Then it's fine, then it's still a valid level. But if it was, for example, like this, right? And you're just taking some random low and you don't have any logical explanation for this low, why you should choose this low, then it's not a valid move. If a build-up trap can gets invalidated, can become ALQ, maybe. Yes. So, I mean, it depends on how it looks, right? If price takes this one out and reacts to this one, then obviously this low doesn't have anything special, but then the lowest point would be ALQ. So it becomes a new relevant point to trade away from. So I hope this is clear. Let's get to some examples. Oh. What examples do you have? My mind is a bit cloudy today, but I hope it's all fine. So first thing I see, a perfect build-up, right? So I would see this as a build-up trap. This would be a context trap because we are reversing bullish here. This was the F-boss, the inducement, and the daily level here. So we are in a bullish leg, right? And this would be Hamza.
Yes, bro.
What is this?
This one.
Yeah.
In terms of liquidity or as a level?
A traps. Why is it a trap?
No, I wasn't for about 15 minutes. Maybe I think I missed that because I wasn't here in 15 minutes. Sorry.
This guy. Here, remember we took out this weekly low. First thing, we had daily price behavior for a reversal. Second thing, we had major price behavior for a reversal. That's third thing. We have a daily level here. That's the fourth thing. So you have four big confluences of why price should be bullish, either short term or long term, right? So here, price is bullish from this point, from this vertical line. All the POIs from the left here basically become traps. But now again, your job is to find out which you can trade or which you can use for context building. So for example, here, this would be a context trap, also a strong high, right? Strong high from the left. So also some type of context trap. And we react to here, of course, we don't want to look for a reversal here. Then you have equal lows. You don't trade equal lows. Then you have some confirmation and you trade straight into the trap. Simple thing, simple shit. This is also a context trap. It's a bit bigger. You also don't have any liquidity for the POI, so it's probably not going to hold. Price continues, takes out this high, gives a reaction, nothing crazy. Price gives you the F-boss to the downside. So this was, whoa. So this was the relevant liquidity. This is just some irrelevant high. So we talked about this last time. Also, we can have an insignificant high, but if we create price behavior that aligns with that, then of course this will be a support for the highest high, and this high will make it relevant, right? Will make this highest high relevant. So we took that out, so we probably sold from this one. Let's see what happens after. And bam, you have a build-up trap. This would be your invalidation point, right? And the moment price breaks through this, you should probably expect price going higher, like this. But if price takes this one out specifically and sells, Hamza, what do you think will happen?
After this high gets taken, you mean?
Yeah,
What?
like
After this?
if you react to this random shit.
I think that won't last.
Yeah, exactly. That won't last. And we will be looking for a trade into that high. Perfect.
Yeah.
Good job. So yeah, this is a perfect example. Let me find one more example for you. Or yeah, let me give me some time. Yeah, let's read the questions first to see what people are asking me. Gets invalidated, some high could invalidate it. So we can put it last. We have the invalidation point. I mean, technically it is an extreme, but it's too far from the left. Extreme is usually the same move. Like if you're expecting a bearish move here, then it takes extreme to continue that move. But extreme should not be a reversal level, right? It should be a continuation or beginning of the reversal. So for example, the reversal starts here, then you take extreme here and you go, right? And usually if it does react from the extreme, then it's probably going to be a trap. Can we have price behavior and PDC at the same time? You can, but we'll talk about it next time. Strong high, low, 13 December. Okay. Oh, okay, perfect. So here we have another example. You have a build-up. This is not exactly the textbook build-up trap because you don't have external structure, or it's like a mix of internal and external structure. But you can still use the same logic, or you can use it as a momentum trap or momentum liquidity, right? This is probably news. Price explodes from there. So like this point where we have the last pullback, it would be the point of interest, basically, or the level of interest. So you see here it takes out by 1 pipette. One nice example. Okay. So I hope this is okay. One more message. That's why after this one. Makes sense. Okay, perfect. So I hope everything is clear and we can continue. Build up trap is done. Momentum trap is the same. It's done. Trust is subjective liquidity. Okay. So as I said before, every equal high or equal low will have some supply or demand above or below. If there is none, then it should be ALQ. But here, for example, why did we sell from here? Let's try daily first. Yeah, on daily, I can see a really nice equal high, really nice equal highs, relative equal highs. One thing to note, don't ever do this. Okay, this is relative equal highs, equal lows, okay? This is not relative equal lows because it was already taken out, and if this was taken out, then this low already absorbed the liquidity from the remaining one, from the previous one, right? So you treat this as a separate structure, as one structural point, and you treat this as equal low, equal high. So why does this matter? For each of them in future, we'll have different rules and different way to interact with them, okay? But I've seen too many people marking equal highs like this. It's annoying. It's not. It's just one structural high right here. This is equal highs. What this means is, I mean, relative equal highs. What this means is the moment you enter this window right here, it's a no man land. You are not sure what you are trading away from exactly. And that's why we separate liquidity into subjective and objective liquidity, right? Objective liquidity should be points that if you mark, I'll mark them the same one. It will have the same way. We'll have the same price level. Exactly, right? For example, if you mark a structural point, if all 59 people in this room mark a structural point, it will all be the same, right? If all people here mark Harrison's liquidity, it will be the same. If all people here mark a build-up trap and we follow the external structure, it will be the same. But it does not apply to equal highs and equal lows, because some guy will mark this as a trend line, some guy will mark the trend line like this, some guy will say the equal lows is here, some guy will say the equal lows is here, and we'll have different results. Okay, so this is why you say this is subjective liquidity, and why it's hard to trade equal highs and equal lows overall, and how it built around it, and why it's easy to build something around clear objective levels. And that's why we also have ALQ. ALQ should be the last point visible. So again, if you mark, majority of people here will mark it the same way. And that's why, for example, I don't use trend lines. I don't use trend line liquidity. I don't use, trend lines for analysis. Like, it's too random. But here we can say it's clearly equal highs. Again, it should be from the left. If we make equal highs, let's say, if this high doesn't exist and we make equal high with a high from the left and current high, so this is the reversal, remember, then we can still trade it. This can mean that we are creating active liquidity for a stop hunt, for example, okay? But if we have equal highs from the left and we reverse here, then we don't trade it. Then we don't trade here. But if we have the equal highs here, that would mean that there's some supply or demand right above it, and that there is a trap right above it. So this is a perfect example, right? And you see, if you zoom in lower time frame, I mean, you can stay on this time frame. Price doesn't take anything else. If price went a bit higher, I would be confused. I would say, I would wait it out here, wait for price to do something, and then decide what to do next. So nice one. Another example is here. So we obviously sold from equal highs here. You see, again, the first move doesn't swing. That's why we don't trade that. And let me just check this. If there's equal high or equal low, you should have a trap or a supply right above or below that, right? So it can be even a hidden base like this, a wick. Price gives a reaction, later on sees that trap and give you a nice trade. Perfect. One more example. Hamza.
Yes, bro.
Let's go. Annotate, find it. What's happening here?
So we have a sweep with news here, and then the last pullback, it was here up. The last pullback, just wait a second, it was like this, and the market did sweep this high, and then
But why this high? What makes this high special? Like, why here? Right? Why, for example, not here? Like, what confluences you have that can make this high good? Now you don't liquidate it.
Maybe it was used as a POI.
But why is it used as a POI? Yeah, perfect. That's what I just said. Don't mark equal highs like this. Oh my fucking god! Look.
Yeah.
You have equal highs here.
Yes.
Okay, so you have equal highs, a POI right above it, and you have a trade like this. Perfect. So yeah, that's it. It's that easy. Yeah, I think this one is straightforward. Like, we don't really need many examples for it. I'll check my markups. You guys can ask any questions again. Where's my Discord? What's happening? Oh yeah, I'll check my markups quickly if there is something nice that we can use. Not that many. Yeah. Oh, that's interesting. Yes, go Wolf. What did he send? Oh, nothing. Okay. Okay. So I think that's all regarding this subjective liquidity thing. And then you have reactional trap, which just means that we have a trap, we react to that trap, and then we just build context, right? But just because you can identify the trap or any liquidity point or any weak point does not mean that you are going to automatically look for a sell. The sell should be a separate, complete trade, meaning has a level, has an entry level, and everything that we're going to talk about in future calls, right? And generally, if we see this, we don't really want to trade this. So traps are danger zones. I mean, you can do whatever you want. You can trade it if you want, but I just don't recommend it. Can give an internal fake break of structure or price behavior. So that's exactly what we saw in the first example on today's call. Now we can identify traps. So let's see how more complete the analysis will be. Right, so this was an FBOSS. This was an FBOSS, break and retest, inducing all, trendline breakout, trendline break and retest. Perfect. Then we had a trap. So obviously this low did not have price behavior. It just had a level, but not a price behavior, right? So this low is weak. It becomes active liquidity. And based on this context, because this low cannot swing yet, it would mean that it becomes a trap, right? Bam. Price gives a reaction, gives you an FBOSS, and it will make perfect price behavior to later buy from the level. So I hope this is clear. One more example that we had was, please let me remember, here. So we can go to H1. Some of you mark this as an FBOSS. That's wrong. We just know that this low is an irrelevant low or insignificant low. So I'll just mark it black. What happens? Because this low is not ready to buy and there's no reason to buy yet, this low will become a trap, right? And then the trap gives you an FBOSS up and price behavior that will later validate that low. So we will have a buy here. Okay, so I hope this is clear. A trap can be a POI and a POI can be trap. So I told you there's like a 10-20% chance that a POI will hold. But of course, nothing is guaranteed, right? So just because we mark something as a trap, we just follow the same protocol every time. It will make us more consistent. It will make us guess less, right? At the end of the day, we will not say, if price sells from here, we're not gonna say, oh, I should have seen it as a POI. No, because every time we trade it, we just see the same way. Your mission as a trader is to make consistent, best decisions, right? But most people here decided to focus on singular scenario, on one result. So let's say some people will say, oh, okay, this looks like POI, right? And it's going to be that 1 out of 10 times that price will actually swing sell from here. They'll feel like a genius, but that's not your goal. Your goal is to be right the remaining 9 out of 10 times. So there will be times where the traps will give a reaction. There will be times where it will be a daily move or even a weekly move and you'll get fucked for a few days, right? Or let's say even a week. But these scenarios will not be often. So just be prepared for that. If you try to trade as objectively as possible, which is the case here, there will be times like you're guaranteed that you'll be wrong X amount of times, right? And there's nothing that you can do. The only thing you can do is you can trade subjectively, and then you can say that instead of instead of the strategy being wrong, you are wrong. Oh, it was a POI the whole time, but there was no way to know that in live market. You're basically guessing every single time. You're coin flipping every single time. So I hope that's clear. Like you go on TikTok or Twitter, or I don't know, and you see many people say, "Oh, I took a buy here," but in hindsight, I should have taken a sell. But in live market, while they were trading that, they already did the best decision they could, right? To take that buy with all the information available to them. But it went wrong. So at the end of the day, they'll ignore the whole process of taking a trade, and they'll say, "Oh, in hindsight, it's a sell." So I was wrong, but there was no realistic way for you to know that it's going to be a sell. So I hope many of you will change your mindset eventually. Like I see how you guys think, what questions you're asking me in the Discord, and it's really brain damage. It's stupid. Okay, so I'll show you some examples where things went wrong. So you can just have an idea. Like, of course, I'm showing you perfect examples, but I'll also show you examples. And this is something you should do in your free time later on. So you can have realistic expectations from the strategy. Yeah, but the thing is, I don't even remember. Okay, perfect. Weekly. So for example, here, the on weekly time frame, if we trade it correctly, we would think that this is probably some momentum trap or some build-up trap, right? But this is that 1 out of 10 times that this is going to happen. And this is 1 out of 10 times where you might be looking for buys during this period. And then in these cases, what's going to save you is either skill, either you can have a really good subjective, you can be really good at the subjective part of trading, right? And you probably guess that it's going to sell. Or a second thing that can save you is the layers that we have for our analysis. So just because, let's say the whole time here, we would be thinking, no, not really caring about the time frame, like just imagine this 1 hour time frame or H4, like during this whole period of price action, we would be looking for buys, right? But we're not just blindly buying. We have context, we have levels that now we can find, right? And you can see these lows. Not a single low here is a relevant low. Like it's just some random structures, right? Like we wouldn't even be trying to buy from these points. And the only buy you have is, for example, this weekly open gap that has something that has price behavior and an FBOS, breakout, inducement, the gap is filled, and then finally a buy, right? But if although it gave such a big move from the trap, you're not gonna go on a loss streak. Of course, this is a lucky example. In some cases, you can have 2, 3 losses, 4 losses that will happen, but you should embrace possibility. This will happen. Whatever you mark as trap will one day give you a reaction, right? Same thing here. Just because we know, let's say there's no weekly open gap here. Just say if we're reacting to a strong high, this whole price action, we could be wrong until we adjust eventually, but it will happen. So enough talking. I think this is all regarding the traps. And now we can go to the remaining levels that we said at the beginning, that we named at the beginning. So we said high level objectives, liquidity, traps, efficiency. So now you know all the liquidity levels, all the traps, and for efficiency, we have 3 types. So efficiency basically means that we have the reversal, we are collecting our 100x, but we are only 50x in, right? So we want to buy the remaining 50x in the most reliable, in the most acceptable zones, in the most affordable zones, prices. So we don't want to buy it here. We don't want to buy it here, right? Because majority of our orders are here. So this is also why supply demand works the way it does. It's just for accumulating trades, accumulating positions. So the same thing, price goes down, and this is, for example, an efficient move, right? When price retests everything multiple times and prices multiple manipulations. So the first type that we'll have is EPA, which is efficient price action. Efficient price action. We adjusted the concept a bit. We will not trade continuations anymore from here. We will trade continuations, but not like this. So I don't want you to use level like this. But it basically means rebalance of a range. So every time we break, the moment price rebalance is here, it would be our high time frame level. But all those efficiency levels are not liquidity levels. Meaning, if you want to buy here, you have to ask yourself a very important questions. Liquidity where now? So you have 2 options. Where can liquidity be? On the left, meaning inside this leg, or on the right, which is price behavior, right? And this will apply to every single one of them. Liquidity from the left, price behavior. Oh, almost. Yeah, it's taking time. Oh, perfect. So one thing about efficient price action is you don't want to trade it right after a reversal. Right after a reversal, you want to trade it when price is ready to explode or already exploding. And enough liquidity, of course. So not after a reversal means that we just have our first main breakout structure. So let's just call it a key boss. Usually after a first breakout structure, price will not fly, right? Price will usually mitigate it really deep. So let's say it will come back to 70, 80%. It breaks another time. You have a second break. Okay, now price is more likely to buy. It's more ready to buy. But again, it usually doesn't buy right away. It will come back to 50%. The third time, I would say price could be ready. The third time, fourth time. And that is when you can use this one, this level for a buy, for an EPA. And again, then you will look at here if there's some ALQ or some high time frame structure that could line up with this, or if you have price behavior. If we don't have anything, if this is just a big fat gap, you will have some special form of price behavior. For example, price will not just reverse after a fake break of structure, but price will do this instead to compensate for the liquidity on the left. But if there is liquidity, then you can execute a trade. If there's ALQ, for example, you can execute a trade, right? So I'll show you some examples. One more thing is sometimes price does reverse and it does not mitigate. It's just one break of structure and it explodes. Then this would be an original rebalance, original demand, and you can still use this as your level, as your original demand to trade away from. So you can use this as a rebalance level. And I think that's all. So I'll show you some nice examples. Let's see. You can use both objective and subjective structure for this. But it depends on how price is looking at that moment. So yeah, let's go. One nice example we have was the buy Hamza. So we said we don't trade equal highs. Price sold from equal highs, meaning we would contextually be targeting that in the next days. Price rebalance here. You see this is the last buy to sell, right? So this is the only key level on high time frame that we have. Another one that we would have is liquidity, right? So we have two main levels here. Okay, we have a rebalance. Bro, Hamza, are you here? Then the guy went away. Okay, whoever, open your mic.
Yes, you hear me?
Bam, Rafael. So we have a rebalance here. Question is, do we have enough? I mean, do we have a liquidity? And if so, what kind of liquidity?
On this whole range of rebalance, this is the all liquidity I see, AOQ. This is something small, not very special, but not really, to be honest.
Okay. Oh no, Rafael. Okay.
But you have like this, maybe this FBOS to create liquidity for rebalance.
Oh yeah. Okay. So first thing you see is it could have been price behavior, right?
Yes.
So that's something bonus. And here you see you have news release probably. Like you have big momentum up. That's why it was so fast. So it looks like it's nothing, but it is something. Then that would mean that this right here would be ALQ or a trap with subjective liquidity. So here you guys can see the trend line, the equal highs. And this would be the trap right here. So we do have liquidity, some liquidity from the left. It's decent. We can have this as price behavior or as additional confluence. That's fine, right? So a perfect one. Let's look for another one. It can be a continuation level too. I said we don't use it, but with enough confluences, you can use it, definitely. So I'll just show a few examples again. For example, here, you have a rebalance, which can be a high time frame level, right, for a sell. So there's some ranges, but you should always make sure that we have liquidity with that, line up with that. So here we broke structure, we created H4 structure, came back, rebalanced, then you wait for entry models. Here, price broke, retested again. You have to make sure that there is liquidity, right? So either here or here or here. Let's do something from this year. Same thing. We have some liquidity. I mean, we have a rebalance and we also have some liquidity. Sometimes the rebalances will even line up with FVGs, with daily weekly FVGs. So here, as additional confluence, you see, you have a nice daily FVG line up with that, with the range. So perfect. Well, let's go to daily. Okay, let's talk about objective structure one. It is a bit tricky here. For example, here you would prefer objective structure, or you could use objective structure. You could use both subjective and objective. So this is subjective, and this is objective, and then just see what's better, right? Because here you have a high, low price breaks. So then you evaluate based on liquidity, which one will or will not give a trade. Let's go to H1. Okay, perfect. So here we took out a clear trap from the left. A trap even gave you nice price behavior on H1. Here, FBOS inducement, and even on M15 for an entry. So look at this beauty. FBOS inducement. So this was the liquidity for the rebalance, and the rebalance was the main swing level. But for example, why we did not buy from here when price retested the first time is because we don't have any liquidity. We just have this, which seems like some random H1 low, and we don't have any price behavior with that. Let's try something recent. Friday buy. That's not the best one. So no. Oh, but of course it will not work in consolidation. So this whole price action is doomed. This whole price action is doomed too. So no. Unfortunately. I'll post a few markups after this call so you guys can study it. But yeah, let's go to the remaining two because this is too long. Oh, where is it? Oh, okay. So the remaining two is FVG. Oh, rebalance. FVG. And weekly open gap, which works the same. So FVGs and all these form of rebalances should be used in the current leg. It should be used for continuation. In worst case, consolidation, right? Like let's say price does this, and we know it's not really gonna swing by, but we could still use this as a small reactional level on high time frame. If this is lower time frame, then it's not worth using it if you know the price is consolidating. But in most cases, use it for continuation. So FVGs should usually be daily or weekly, sometimes H4, but it should be a clean level, okay? Because you see how many FVGs you have there in the market. So it's really hard to filter them out. If you go to daily, you can find most of the FVG fills and how they played out, right? So let's see. This was a daily FVG fill. This was a daily FVG fill for a continuational buy, right? This was a daily FVG fill for a continuational buy. This also, and again, we set high time frame liquidity. So that would mean that we would assume that price is going to reverse, right? Or have a pullback, meaning it's not the best idea to use this FVG fill, for example, because we could be short-term or long-term bullish, right? And if you're bullish, then that would mean that this gave a reaction, right? This gave an FVG fill reaction. And again, here we sub liquidity. So this FVG fill, for example, is already from an opposite leg. At the beginning of reversal, it could give you a small reaction, of course, but it's not recommended. This gave you a continuational trade. This gave you a continuational trade, probably. Many trades, actually. This was a daily FVG fill too, but it was a bit weird, so I wouldn't use that one. This was the weekly one that we saw before. And yeah, is that low PDC and liquidity structure low? Which one? PDC and liquidity structure low. Which one?
Ray, I didn't understand the question.
Oh, okay, good question. Well, it cannot be PDC at all, but it can be a build-up, right? Or it can be structure. So first major daily weekly structure that we are sweeping. Does it have to fill the whole AVG? Yes, we should always consider the full fill of the AVG. So also same thing here. This one is shit. I wouldn't recommend that. But yeah, this would be the rebalance. So you see price breaks. Oh, okay. Oh, okay. So here you see price breaks. It's ready to explode. It's not ready to sell yet, so it's not a reversal yet. Price rebalances. We look for liquidity. We look for price behavior, and you also have a buy here, right? So I hope this is all.
Oh, Milan.
Oh no, you're not gonna ask questions now. So
Okay.
guys, if you're gonna ask questions during the middle of the call, I'll kick you. Ask at the end. So FVGs are done. And the last thing is weekly open gap. Weekly open gap is really rare, but it's a powerful one. So the one we see on COVID, the one we saw on COVID was the biggest one in the history, right? So you always want to mark Friday close. Friday close is here, and Monday open, which is right here, right? And then you see how far it came back. So here, not much. Here, it filled completely. I mean, it filled halfway, but the complete fill. Oh, is my connection okay? I hope so.
Yes, no.
Okay, no. So this would be a complete fill, but as you can see, it's only a halfway fill, right? So the first stop here, we would not try to catch that really, but the moment price fills it completely, is the price behavior, liquidity with that, it's a perfect trade. Another example we saw was the sell right here. Look at the left. Where did Friday close? Friday closed here. Monday opened here. Monday tried to fill it. It filled 80% of it, but the full fill should still be here. So this big sell right here came from a weekly open gap, right? Another nice example would be right here. We have a Friday close, Monday open, price tried to fill it, didn't fill it completely. And on the biggest fill, on the complete fill, you have a nice sell to the downside. So this is all forms of rebalances. And now you know every single high time frame level that I use, but there will be subjective ones, there will be unique ones that you'll see in the live market, and you'll have to decide. So last question, is this even a valid liquidity point? Anyone? Adam, you wanted to talk.
So you asked me if this is a valid liquidity point?
Yeah.
As I see this, I see it like this, but the main liquidity is this for me.
So this is main liquidity, it's daily structure, but this would be ALQ, okay?
Yeah,
You have one
exactly.
chunk of liquidity. Okay,
Like
so I think this is all. Your next homework will be going back to the moves that you've broken down. Okay, so let me see. Homework, bam. So these are the moves, the 19 moves that you have broken down. And your mission is to try to understand where each of the moves came from, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay, we're gonna add more. 20, 21, 21, 22, 23, 24, 25, 26, and yeah, pretty easy. So 26 moves. Okay, I'll screenshot this, and we're done. No worries. We're almost done. And if you guys want to improve, you can also just go to M15 or H1 as a default time frame and try to break down the price action with what you know. Just mark traps, liquidity points, see how well or how not well the liquidity points work. But that's it for today. So you guys can ask any questions. Last 5 minutes for questions.
Hi, Mylan, can I ask a question?
Yeah.
For the 28th of October, that sell we had last week, right? There was like the liquidity levels to the left was a bit could you go to like the 1 hour chart?
When was it? What was the
28th
date?
October last week. Yeah, so like is this like can this be high resistance that price perfectly reacted to? Or would you see this whole thing as ALQ?
Good question. Now we can vote. So what do you guys think? Okay. So, I mean, seriously, do we see this as some important stop hunt?
Nope.
No. Okay, if you're not sure, you can also verify. You can even look at the size of the structures. Like, there's nothing special about this one. It's just sweeping internal. In that case, this would also be high resistance liquidity, right? So it's nothing unique. But then you just look at how deep price mitigated these things, and you could say that this is like one chunk of build-up. But of course, this would be the best. This is another thing. This is what it reacted to, like lasting. Even if this was high resistance liquidity, the one you mark, it's not the last thing that price reacted to. You have another structural point above that. Even though it's internal, it's something, right? And we are reacting to that. So no.
Okay. Thank
So
you.
I would just say we are reacting to this. If you can justify it somehow with what you know, then it's of course a good a possible trade. If not, then you wait for this one. But
Yeah.
I personally saw this as a shit level, and with liquidity rules that you specifically know, not everyone, but just you know, shit level, good PB, PDC.
Yeah.
Right?
That's why. Okay.
Okay.
Thank you.
How do you explain the buys this week? We are not explaining trades.
Milan, can I do a quick question? It's like 30 seconds.
No. Okay. Have a good day, guys.